Good weekend, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the weekend of July 9th, 2022. Now, before I get too far, please hit subscribe if you're watching this on YouTube directly. For those of you watching on our website, no problem. But if you're hitting it on YouTube, that way, as soon as I put these out and they get posted, you get them. Second thing, throughout this video, we have so many different special offerings, everything from our futures trading kit, free access to my research for a small trial, Linn research, all there. Just take your cursor, move it straight on up to the icon that you'll see, and click that. So, interesting week, interesting end of Friday. We saw jobs data that is much stronger than the market anticipated. So, first of all, what that gives to the marketplace is a clear liftoff for 75 basis point hike. I was saying 50, 75. I'm in the 75-point camp now because the Fed's going to say the jobs market's not backing off. The market can absorb the increases. They want to curtail demand, more people working, more demand. They'll back off on that. The second part, while I think we're already in a recession, the stronger the jobs data, the shallower the recession comes in. We'll see if that happens when we get in, if we get 2 consecutive quarters of decline. But 2 consecutive quarters by themselves of decline in GDP don't mean an awful lot. You have to get unemployment to shoot up, and we haven't seen that in any way as it's 3.6% yet. The Challenger grade, they were looking for nearly a 15,000 increase in corporate layoffs. The JOLTS numbers, as we saw, they came in shallower. We'll see what goes on. All right. So you put it together, let's go to the charts. On the monthly area chart, we came up so far for the month. We're getting close to a third of the way through. We're up 2.9%. The resistance way up here at the 42.73 level. When you come to the weekly chart, we were up 1.9%. And the market is trying, if it can get through, and I'll show you this right through here if I can get there. There we go. This will work now. Right here, this week's high on a closing basis was 39.16 and a quarter. If the market can get through that, you get a pattern of higher lows, higher highs. Maybe you make a run to the 18-week average of closes, 41.36. When you look at a weekly bar and you put on the swing lines, you got lower highs, lower lows. However, should the market clear the 39.50 level this week, you could have higher lows, higher highs at that point. Big resistance starts 41.05 to 41.36. So that would be a logical bounce area. I had one of my good friends call me from Spain yesterday. This is one of my good friends in America that's there for the whole summer. And I asked him, of course, the euro, and he's just smiling. Of course, he and his family all got COVID there. That's not the prettiest thing. But the reality of the situation is, we were discussing what could the market do. And I said, it wouldn't surprise me if we take out the recent lows in all the stock indices and at least get to the 200-week average, if not a decline of 10% from that level. As for a big decline, no, I'm not looking for anything in 15, 20% from that level. Doesn't mean it won't happen. I don't see it at this point in time. When I look at the Bollinger Bands, the market has done its job of holding them. Big resistance now at the combination of the 100 and the 18-week average of closes, and momentum in the market never did embed. It just sort of laying down there, could turn up very easily. We have a similar picture in the Dow. You can see how the market has paid attention each time it's hit the Bollinger Band, snaps right back. Big time resistance at the combination of the 100-week and the 200-week moving average of closes. Again, a market on the weekly chart won't take much if you can clear this 31,867 to get up to that resistance zone. So I'm in the camp that I'd like to see that happen and get more pressure off the market, because I think that come the end of this month, the market will reverse down as we get the Fed talking about the 3/4 point hike. I can't imagine that the press conference with Mr. Powell on the 27th of July will be anything but hawkish. And I think that is what you're looking at. Timing, always difficult to figure. The NASDAQ still has an embedded reading, or does it? No, you lost it. You got a 21 reading. So I can make the argument, if you clear 12,262. You come back up into this resistance area, but long-term bullish, no. Bounces in a bear market I'd like to see, and this is all predicated on getting through not this week, but the prior week's highs. Don't know if you can do that, and the same holds true in the Russell. It never did embed either. It's just laying down there, and I can make the argument back to the 18-week. Let's assume none of that happens, and we don't get through 2 weeks ago's highs on these markets. Then the lower Bollinger Bands in all of them, they're in play. Trend is down at that point. In the 30-year bonds, what did you do? Back here, you lost the embedded reading. We hadn't hit the 18-week average. We finally got up to it. It owed it during that whole time, and that was it. I think the traders are going to go short forward, going just forward. Stops over this week's high, and I think they'll play that the market's going to slip over time back down to wherever the Bollinger Band is. 10-year notes, not the same thing. You don't have the outside week down. I see the resistance there, but you have a pattern of a higher high, lower low. I don't see the same pattern. Can you slip here? Sure. You know, the Bollinger Bands are what's in play. In the dollar index, all I was looking for on this particular run was up here. Now, where the market broke out was right here. Do you remember when I was telling you, and maybe we should go to that number. I should be able to get to it if the system will let me. Well, it doesn't appear it wants to. Okay. Oh, there it is. It is letting me. I like to teach this. Let's see if it'll go back there. It's just taken slower than I wanted to do, but it's so important. This is a breakout to the upside. You'll hear me often say, if you get over the Bollinger Bands and you get two successive closes over them in the top quadrant of the day until the market takes out the most recent low, I consider that an upside breakout in the market. Now, here's what the market looks like. Now, anytime you're up 4 days in a row, 5 days in a row over the Bollinger Band, I'm looking for it to roll to the right-hand side. So watch. You'll get it. Bingo. But you had 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row. It's highly unusual to get past 5, but where I see that happen is the breakouts. Go back and take a look yourself when you see this on weekly charts especially. Dailies rarely get beyond 5. Weeklies can do it, and learn that. That's an important pattern. Then you get inevitably corrections. You lose the embedded reading. Okay. And if the market makes a run again and if it embeds, you're back into the play at the upper Bollinger Band. Watch. And that should be the next resistance point. Does this mean I'm bearish in any manner? Not at all. Still very bullish. I have an embedded reading. I think the breaks in the market will still be bought by the pros. Eurocurrency's the flip-flop, but it didn't have an outside breakout. See that? You didn't have that ever take place. So you're just hitting the Bollinger Band bouncing. Where's the market going? I think the pros are going to drive it under parity. You're so close, they'll just go for the headlines. So that's what I think will happen there. Canadian dollar, you know that the Canadians this week, I think, is their central bank meeting. Look for them to match us in a 75 basis point hike. The question that you have and the problem is on a weekly chart, you hit the 200 week in the Bollinger Band and you haven't been able to get through that. I don't think you want to get overly bearish at this level. I'd wait for better price entry, but be bearish. Japanese yen, as long as you have the embedded reading and the Japanese don't surprise us by saying their inflation has come down enough, they're going to change their monetary policy. Why not still? 71.47, the lower band is a target. Bitcoin, I've been looking for a bounce in the market. First off, we're embedding. This bounce area tells me what? While the daily charts have come up and hit my 18-day average of closes that I'd been looking for when on the daily chart you lost the embedded reading, I don't think there's big numbers left in this market. I think the pros are going to sell it starting right here at the 22.57 level, the 200-day average. You're at 21,765, about $700 higher, and I think they'll look for the 16,000 level. You blow out of that trade, that short side, if the red line closes over 21 by Friday. WTI crude, you can see the pullback. So we just went from 675, we're back to a differential of 223. You can see that, and did I not say, and I know I said it on the daily charts over and over, you're caught in the Bollinger Bands. Don't play that. You want to stay away now from this market. You're going to get caught in this type of action through it. When the summer ends, you're going to hear all this talk about we need this fuel for X amount of reasons. What are they? Heat. And at any point, Russia can pull the plug and shut off the natural gas to Germany and a number of areas. There's a play going on right now where Germany wants Canada to release a set of turbines so that Russia can't use it as an excuse that while they do their maintenance and they need this turbine to do the maintenance, Canada's holding on to it. At the end of the day, I think that Canada should give in to Germany. Don't give the opportunity to Russia to turn off the gas just because they blame in any manner NATO members. Doesn't make sense to me at all. WTI crude, you can see what the market's done. Went from the upper band to the lower. Now you don't want to play that. Gasoline, did I not tell you to watch gas, buddy? Prices have dropped 10% since July 4th. Today's only as I'm shooting this tonight. Told you what would happen. And that's it, because the service station and the providers that take it from the refineries on have all seen, okay, we've made our margin. We got the American public. Now we can bring prices down. This isn't the end of price gouging. It's going to come again, all right? We're going to get the end of the summer driving. But right now, a small reprieve. That's how I look at it. So you put it all together. You come up with the game plan. Remember to take your cursor up here for our free offers. I'll see you during the week. Take care.